This is a famous photo from the Lahaina wildfire back 2 summers ago. This property was the only one in its neighborhood to survive in a sea of neighborhoods completely burned to the ground and communities decimated. So what's so special about this property? Well, this structure had a metal roof and masonry siding, both elements that helped protect it from falling embers. This property also had defensible space and was well maintained far beyond the other properties in the area. Now, this all seems fairly self-explanatory when we say it right now after the fire, but would you have been able to tell the difference here? This is exactly what Faura helps companies do. Insurers are already using climate modeling and in-person inspections, along with a whole arsenal of both tech and personnel. So why are we still experiencing all of these losses? How do we stop something like the Palisades fire from happening again? Well, what we found was that it comes down to quantifying structure risk. Everything Faura does comes down to property survivability, and we'll tell you what that means in just a second. Faura excels in not only quantifying, but incentivizing natural disaster resilience. We help you pinpoint the survivability of a structure for all natural disasters, placing more profitable business in higher risk areas, and offering an added benefit to policyholders to help them reduce their risk and stay more profitable in the long run. And here's how it works. We ingest building materials and conditions and resilience characteristics to give you a survivability score. That score tells you more about whether this property is strong enough to withstand a common peril and gives you a mitigation strategy to allow policyholders to make changes. So, as you can see here in this example, for this property in Austin, Texas, we have all 5 natural disaster scores, and we can also give you mitigation activity based off of those variables. The higher the survivability score, the greater chance that property is to withstand the effects of the peril. And as you can see here in this street, we've already done a lot of work to predict the level of accuracy of these survivability scores, predicting the mountain fire and loads of other natural disasters with 95% accuracy across a portfolio. Insurers have thousands of properties across their portfolios, many in traditionally high-risk areas. Using property survivability metrics, we can make more efficient decisions about which properties are more or less vulnerable based on structure science. Now passing it over to Peter at Loro to tell you more about how we can use this technology.
Hi everyone, Peter Tilbrook here, CEO of Loro. I'm delighted to showcase today our latest feature, Loro Boost, in partnership with a fabulous company, Faura, who do immediate risk assessments based on properties to really give you a lot more in-depth analysis of the risk you're underwriting. We're going to look at this in a real world situation. We're going to run through a quote, bind, see how we immediately tap into the great resource of data that Faura has and how that's going to affect our underwriting and the end result of the process. So here we are on a Loro created portal for our company Pulpo. We're going to go through the process here of a quote. Right, so the beauty of Loro Boost is that we connect many points of data to a single answer. What this means is you can ask your brokers, policyholders, far fewer questions and get to a much more detailed underwriting analysis of the risk. There are various ways you can ask questions as well in Loro. Optional questions, conditional questions. You can create whatever customer journey makes sense. In this case, I've had an optional attachment question that they can choose to answer or not. Here we have our pricing results based on the information that's input by the insured or the broker and Faura's data that's happening in the background. I'm going to have a little look here at what the results are. So here we have a summary of our risk information that we're viewing as a client with our various taxes, fees, price breakdown, duration of cover. And here is the assessment powered by Faura. So they're giving us a score based on these exposures. So we've got a risk score for flood, wildfire, wind, quake, and hail, all of which can be factored into our pricing, which we'll look at in a second. But from a client's perspective, they've simply entered their address and they've got a price based on our considerations. If we go ahead and purchase, I'll show you how the customer journey finishes, and they're ready to go ahead and purchase. Here at Loro, we have various payment methods that you can use, ePay, PayPal, Stripe, or manual bank transfer. We'll go through the Stripe option quickly to conclude the process. And we're all done. So what does that look like from a setup perspective and process in the background? We're going to come now to our back office, our Loro environment, where we can see our latest policies. This is the one that we just did. So Tilbrook here with commercial property. I'm going to tap into that and see here all of the information that was given, the location of our policyholder. I can download any documentation, which includes both the worksheet of how the pricing was calculated using the Faura data and the policy document itself, which includes again the Faura data that we've asked to be included. So why is Loro special in terms of setting this up? A lot of systems can connect APIs. The beauty of Loro is the speed and efficiency of how we can do that. So if we look into the background, behind the curtain of how this was set up, looking here at ratings, we've got our Faura rating. We have this feature called Loro Boost. So we've set up our questions, we've decided the format and the workflow, we've set up our documentation, all the things that you'd expect to do. In addition to that, we've connected with clicks, with no developers, the ability to bring in that data from Faura and use it from whatever data point we're sending to them and receiving back, for example, the scores we spoke about here, and how we want to use those within our process. In this case, I've attached them to an Excel spreadsheet. We're going to create certain rules based on those scores given that either are going to trigger a referral process for our client or affect the price should we so wish. We can then use those variables as you've seen in the documents or the checkout screen of our portal. It's a very powerful way to connect data points to your underwriting process really quickly and efficiently. Make the most of these excellent insurtechs like Faura that can give you unique and valuable data into your risk assessment. As a quick reminder, you can go to the faura.us website to find out more about their offering and all the great things and services they provide. And you can go to the loroinsurance.com site to see more about our product. Again, Loro is completely free to try for the first $100,000 of bound premium. The time is now to change your underwriting process and come into the future.